Hey guys, Mike here. So obviously it's going to be a big week in the stock market this week. A lot of economic data will be rolling out. So this will be a very volatile week. And we're either going up or we're going way down. One or the other. And I'll show you on the chart as well what to be looking for, the economic data coming out this week. Also something else, a ratio you need to pay close attention to, as you can see, and I'll show it to you. Absolutely kind of tells you where the market is going or why it's moving one way or the other. And if you just look right here, I mean, this is the pattern we've been in for a while, right? Since 2022 started. And as you can see, this looks just like a ladder, right? And you can see right there at the beginning, we bounce, fell through, came down to the next bear market rally, bounce, came through, and now we're down here to the next rung, and you can see we bounced off of it. It looks like 4 different times now. And you can also see the gaps up there. So we got 2 gaps above, 1 gap right below, and then 2 gaps that opened up like 2 months ago. And so, that's the big thing to see. Are we going to continue to move up, which you'll hit a ton of resistance going up, and then break through this next rung, start heading down more or not? That's really a big question we got to look at, and which gaps are going to get filled first. And the economic data is going to tell us that, and that's just the way it is right now. And you can see Monday, not really nothing big going on, but then you get to Tuesday, the 13th, boom, CPI data is coming out, and that's going to be huge. A lot of people expect it to be down, of course. Let me know in the comments what you think. Wednesday, we'll get to see how bad the mortgage industry is doing, because I think it's a hot mess right now. And you'll get PPI stuff, more CPI data coming out. And then Thursday, we're going to get retail sales. So we get to see how we're doing. Are we still spending like crazy? How's the job market looking right now? This is something the Fed's going to be watching like a hawk. You can bet money on that. And then, of course, Friday rolls around, and we're going to end up getting the sentiment stuff from the Michigan Consumer Sentiment Survey and a bunch of other information. And odds are, spoiler alert, I'm going to go ahead and say it's going to still be bearish. That's just my guess on the Michigan Sentiment Survey. With the CPI data, it's all about core. I think the headline should be coming down. It should be, because energy prices were down. But the core is a whole different story. Housing makes up a lot of that. And so it's a lot more sticky to see, and that's what the Fed is looking at more. But the market's going to react how the market wants to react. Now, there was an indicator came out, a bull and bearish indicator came out from B of A the other day. And you can see we're on the dead bottom there where it's extremely bearish, which, I mean, we shouldn't be surprised. Obviously, at the bottom, you got extreme bearishness. At the top, you got extreme bullishness. It's always going to be somewhere in the middle, really. But we're there at the very bottom, just starting to curve up. As you can see at the bottom. You can see we hit that in 2020, didn't come anywhere close to it in 2018. Funny thing was, in 2015-16, when there was a sell-off, it wasn't even a bear market, it was way down there as well. On the left-hand side, you see the back test. So in 08, it was obviously down there as well. And by the way, if you get anything out of this, please hit that like and subscribe button for me. I really appreciate it. And so it's no surprise. I mean, I don't know how you can have a bullish, whether it be in the market or the economy, when people are paying, we're still paying the prices we're paying, And I was thinking about this day, we were driving around and driving by some houses. And to be honest with you, if you're a homeowner, the truth is you should be really happy about inflation. Honestly, I think this is a one-in-a-lifetime event to see housing prices go up as fast as they did. The question is, of course, how long will they stay up there? How far will they drop is the bigger question. And, but still, there's no way I don't see them, because this ain't 08. A lot of people trying to paint this like 08, we're going to crash. And I'll kind of do a video about that a little later. Of some concerns I have about it. But yeah, I mean, these houses went up so fast in certain markets that they're way up there, and it had to be a major housing crash to bring them back down as much as they went up. I mean, it was insane how fast these houses went up and stuff. And I was thinking about telling my wife today, I was like, I don't know how anybody's refinancing today or buying houses today with these mortgage rates. My Lord. And it's just crazy, because now people buying, I guess really since, be February, March maybe, in these houses, that they're probably underwater, because I know in my area, the housing prices have come down, and in other areas, they've dropped like a rock, and you're also paying a much higher, mortgage rate, I guess, especially coming from like May, June, and July here. Yeah, good luck with that. And so that's why I see these programs rolling out, and I already see here we come with these programs. Another bank, I think Citibank, just rolled out, just like B of A did, some kind of program where it's like no down payment or 3% max maybe, and don't worry about your credit history and all this other stuff. And so that's usually what creates a problem, but it takes a long time for that to take effect and stuff. And so, yeah, but interesting times. And I was thinking about that, and I was like, I guess in a way you got to be happy with inflation if you're a homeowner. And if you're a renter, it sucks, right? So sorry about that one. But anyway, at least there's some good that comes out of it. That's why the super wealthy has gotten much more wealthy, because they own most of the real estate in the country. Congratulations to them and all the landowners out there. But the ratio I was going to talk to you guys about, which you can see plain as day, I'll show you this if you ever want to look at it, is look at the XLU, which is utilities, divided by QQQ, and you'll see, and what you'll see is when the ratio goes up, the QQQ or the S&P 500 will go down, right? Because remember, utilities are defensive. What has been doing really well right now? Defensive plays like utility. They've been killing it. And you can see back here in 08, just starting the last time you've seen these major moves, you can see a big move up in that ratio, and what happens? The QQQ ends up dropping like 42%, I believe, is what that big move is right there in 08. And so, because people go defensive when it comes to anything that even resembles a recession or anything like that, and utilities tend to do well. And we're in that part, as I've showed you, that phase of the economic cycle right now. That's why people have been loading in utilities. You go up to 2018, we sold off. People were fearing recession. What they do? They load up in utilities. QQ sold off about 20% right there. And you can see what's going on here. Right before 2022 hit, people were buying into utilities, getting more defensive. And what's happened to QQQ? It sold off, all right, which tracks the NASDAQ, of course. What do you see going on now is you actually see the NASDAQ's been coming up the last few days. And then we go to the daily, you can see what's happened. The utilities have sold off because they're up so much right now. It's insane. And boom, so the QQQ popped. So, it may take a minute or so, but you can see over there right here to the left as well, when you see NASDAQ pop, what happened? Utilities sold off. Okay, so people were getting less defensive, or really just probably taking profits more than anything else is what was happening. And so it's ratios like that I come across that, if I can see some kind of correlation to track and say, okay, it gives me another good idea. Same way with obviously high yield corporate bonds. I like to look at that one as well, comparing that to the SPY, look for any divergences, positive or negative, and to see what the bond investors are doing as well. And so it's just another tool you can look at and say, okay, I kind of see what's happening, because it lets you know, is the market going more defensive right here? I mean, big money, not us, big money, going more defensive. And you can see that, right? Because big money is what moves markets, not us. And so it's good to at least know what they're going into. And so utilities are one of those things. That's where we're in the economic cycle. I've showed you many times. Utilities, healthcare, stuff like that. And that's what's been leading us over the last few weeks, which is not what you want to see. I mean, that's not signs of a bull market. Okay, those don't push us into bull markets. Those are bear market indicators, and you see those kind of sectors and stuff leading the way. And so, obviously this week, I said it last week, and I'll keep saying it, it's all about the CPI, really more about the core. You're going to see a lot of volatility, a ton of manipulation this week. We also got, I believe, Friday is monthly options expiring. And so I'm definitely going to look and, see what the market makers are expecting us to be at, or where would they save the most money, where is, max pain at for options to expire, or where the most options will expire worthless. And so that's going to be a big one as well. So keep an eye on that. So anyway, I hope you got something out of it. Hit the like, subscribe button if you did. Let me know what you think. What do you think we're going to see on? Take a guess in the comments on what are you expecting headline CPI to be, core CPI. Where do you think retail is going? You think we're going to surprise to the upside or not? And you can even put in there if you want to, how you think the mortgage industry is doing, how the housing industry is doing. My guess is not well. I know some people that do that for a living, and they say it's not doing too well. The high end is, the regular is not. So anyway, hope you have a good night, and I'll see you tomorrow.